Good morning, good morning. How's it going, guys? Welcome back, welcome back. Boy, oh boy, what a day we had yesterday, huh? What a day we had yesterday. As you know, yesterday evening I was gone. I was at my weekly pool league, and the team that we were supposed to play didn't show up, so it was kind of like a waste of time. But, anyways, I got to see the team and my buddies, so that was okay. And then I was checking on the news, and I heard that Trump announced that they were going to hold off on tariffs. Pretty interesting. Pretty interesting, considering yesterday when we were talking about the markets, we were talking about how the S&P was sitting inside institutional demand, and that price was likely going to go up. Here was where price was down here. Well, more accurately, that's where price was. If you guys remember, oops, I can't see you. I can't, all I can see is you. Shrink yourself. Thank you very much. There you go. That's where price was, if you guys remember correctly. And so what did I say? I said we're inside institutional demand that was created here, and we are more than likely going to be going up. That's the odds, is that price is going to go higher from this area, and that it was going to be caused by institutional buying. And I was pointing out also that what was happening with the news, we had Jamie Dimon coming out saying that the U.S. economy is going to go into a recession. We had Larry Fink come out say that he suspected that the market was going to drop another 20%. Okay, it goes back to what I was saying yesterday, how, if institutional demand is in play, there's no basis for saying anything about a market dropping 20%. It's nonsensical. But again, um, that's why you don't listen to the media, because or anybody for that matter. We think, oh, Jamie Dimon, he runs a big bank. He should know what's going on in the markets. He should know about what's going on economically and financially. And so probably his advice is good advice. He works for a corrupt bank, okay, that held accounts for Jeffrey Epstein when they knew what Jeffrey Epstein was doing, helping him with opening up accounts, having accounts, feeding him cash, a lot of cash so he could pay people off. They're all part of that, okay? Amongst many other things, which we won't go through now. So, I mean, do you want to listen to a guy that runs a criminal bank that's part of a banking conspiracy to take your money from your account and put it into their accounts? I wouldn't listen to somebody who's responsible or in charge of a bank that does that. So this is what we were talking about yesterday, how this news combined with price coming down into institutional demand only led me to suspect that price was going to go upwards. All right, so what do we have now? Well, we have, look at this 2-hour chart. I thought this was very interesting. Look where price is reacting to right now. Exactly this area. I think the short-term bias is definitely price is going to move to the downside. Okay, how far down? It's tough to say. I mean, we got these areas here that can provide some support, or we could go all the way back down here, but I doubt that. I think there's going to be some kind of a mid-range drop here before we start to see price pick up again and continue to the upside. Because remember, after this really strong rally here, there's a lot of people buying. There's a lot of people coming in late into the market and buying here. And so they're going to drop it. They're very likely going to drop it. I don't see how they're going to keep it up there, okay? I don't see how they're going to do that. It's this 2-hour chart doesn't update properly. I don't know what's going on with that, and that's been an issue. I've noticed that recently. But the daily chart's already shown us this drop here, okay? So we'll continue to monitor that. I think medium term, like I said, or short term down, medium term up is what I'm seeing here, okay? 1 second. Bless me. I tried to mute that, but I couldn't, so apologies. All right, so that's what's taking place. Nasdaq, okay, same thing. Look at where price responded to. It was from the institutional demand zone, okay? This is not random, guys. You know, we've been told that the market moves randomly. It doesn't, okay? I can 100% guarantee you that it does not, all right? How would I have known this, that price was going to rally from here with a high degree of certainty? How would I have known that? Because it's institutional demand. It's where the banks are buying, okay? And they're working together. You know, I was driving down to the city yesterday, and my friend was saying, how can you be so sure that the banks are working together? I said, good, great question. How can I be so sure? Let me tell you. What if I was to tell you that there was like, 10 cars, okay, with 10 different families in those cars? And their goal is to go from one destination to the next destination. And I tell you that they're all separate. They all don't communicate with each other, and but somehow they all leave at the same time. They take the same roads, the same highways, stop for gas at the same places, get back on the highway using the same roads, travel on the highway at the same time, at the same speed, together, and when they finally get to their destination, they get to the exact same spot, stay at the exact same hotel at the exact same time. Now, would you say that that was just random, that those 10 cars just decided to do all that randomly? Or would you say it has to be a concerted effort by those 10 vehicles to communicate with each other in order to do the same thing at the same time? What would you say? You'd logically come to the conclusion that they have to be working together. So, think about it. How could price create a demand zone in this area here between 2 points, and then after that rally up one candle, rally up another candle to retrace back, and then create another demand area to rally up again to create a demand zone here, to rally up, to drop exactly into that demand zone, to rally up again. If at this point half the banks were selling and only half the banks were buying, you'd get a fight between bulls and bears. This whole myth that the market's just a battle between bulls and bears. Yeah, I don't see it that way. I see it, it's a battle between the banks who control price and everybody else. That's what's going on here, okay? It's not a battle between bulls and bears, all right? There's not a bunch of banks buying and a bunch of banks selling right here. That's not what's happening. Because if you had the same amount of buying, the same amount of selling, price would go sideways. The only reason why price is rallying up here is because there was more buying than selling here, okay? So who decides at this point here that there's going to be more buying? Who decides that? Okay, it's not just, oh, all of a sudden, some banks, they really wanted to sell a lot there, but then they saw, oh, look, buying is coming in, it's more powerful, so let's just decide to go long. No, I'm sorry. You could try to convince me of that, but I won't fall for that. The thing is that I've been studying price action and supply and demand for very long, and I've been studying price action, and ever since I've been looking at the CFTC data and analyzing the CFTC data, I get to see the positions of the banks. The largest banks in the world, I get to see their positions. I get to see what they do, and I know how to read it. I know how to interpret the data properly. So, and it took years to be able to learn how to do it properly. But when you know what to observe, you can see what they're doing. Okay, it's all laid out for you. They're all taking the positions at the same time, doing the same thing in the same direction. You might have some banks out there and big hedge funds that are not in the know, and they're being traded against by the large banking institutions. But those main banks, J.P. Morgan, Goldman Sachs, UBS, Deutsche Bank, those largest banking institutions, they are the ones that are controlling price. Okay, and that's how it works. So that was my answer. That was the short form, because I could go for a lot longer. I could show you a lot of examples, take you through a lot of arguments, and make my point. Okay. All right. So, anyways, so Nasdaq, okay, rallying up from demand. What a surprise! Not really. Remember what I told you about the Dow Jones? At that point, Dow Jones was down here, and we had a big red candle to the downside here. It wasn't respecting any type of demand at that time because it had penetrated through demand. But what did I say? I say that likely the S&P and the Nasdaq are going to start moving higher, and the Dow Jones is just going to follow suit. Okay, so this is what this move is all about here. So big moves in the indexes, really nice to see. That's going to really propel the portfolio up, because even though I picked some really nice assets to trade, uh, and it was holding up quite nicely, everything is kind of affected when you have a 20% drop in the market. And there was some drawdowns on those positions. I never went underwater in my portfolio, still healthy, but today I'm definitely looking forward to seeing those profits come back into the portfolio. Another thing that's nice to see is this big spike up in bonds. Not too surprised with that. They were calling for the end of bonds here. There are some people out there doing videos. I was watching them while I was driving yesterday, and they weren't too positive about bonds. But the bottom line for me, was, as long as this demand zone holds, we're fine. This demand zone is like a fortress. Okay, this is like a fortress. It will be protected like mad. All right. This demand zone is like a serious, it's like a Fort Knox, okay, for the banking institutions. This is where their buy orders are for bonds, okay? Their buy orders are down here. They bought down here, they bought again here, they bought again here, and on this last dip, they're buying again, with the expectation that they're going to push price up. This is my expectation based on the analysis that I'm doing. Could it be wrong? Sure. Yeah, it could be wrong. But I suspect that I'm not going to be wrong. So even though it was pulling back over the last couple of days and it wasn't looking too good, I knew as long as this zone was holding, I had nothing to worry about. So seeing the rally up today is really of no surprise to me. So it's looking pretty healthy, pretty strong, right? Let's look at the 10-year, which is what I was looking at yesterday. I mentioned how we were reacting to this area of demand on the monthly time frame. We got a nice little boost up, and we have wick through here on the daily time frame. So if you take the classes that we offer, you know what that wick's all about. I'm not going to talk about it in detail or in much depth in today's video, but this is something that we teach in our school. So supply is holding, pretty much supply is holding, and we could start seeing a drop from this area. All right, so that's something I'm going to be watching for. I'm pretty positive. Bonds, pretty bullish. I think we're just going to continue going higher in the weeks to come. I think this was it for trying to shake anybody out who decided to get in long bonds when they saw this really nice ascending structure here. They saw this really nice ascending structure here. A lot of people got in long, probably near the highs, so they cause a drop like this. So what do you think? What do you make of this, right? What do you make of this? Market was due for a pullback. You know, price was high. We see a lot of people were taking profits on positions, right? Including our buddy Warren Buffett. All of 2024 taking profits on his Apple shares while there was interest in buying, and then we see the drop. Everybody offloading their shares, like it was up there. Okay, one thing that we teach here at the school is about proportions and how important it is for price to keep its proportions. You know, we look at the distance between moves, right? Between moves away from trend lines. And if you take a look at this structure here, you can see that the move away from the trend line back here was very similar to where we were currently at. So in order to keep with the proportions, there has to be some kind of a drop. Now, remember, we had our long-term target that was contacted. We put this target when we had this demand area. We figured this was likely going to be around the top. Didn't know if it was going to be the exact top, obviously. That would have been difficult to predict. But we figured this is going to be around the top, and we should be very careful with opening up long positions. This is how we were able to safely position ourselves in many different stocks that have performed extremely well, but ones stock charts that were reaching near peaks, we were very careful in not opening up positions in those, knowing that we had to wait and be patient and wait for pullbacks because of this alert. This was like alerting us, this target. It was like, you're reaching your max, you're overstretching now. There's got to be a nice healthy pullback. And so, you know, these pullbacks are perfect. They're beautiful. This is what we need in these markets to keep things proportional. And so, you know, this is what ends up happening. We get to the top, and it surpassed my long-term target by just a little bit. I'm pretty happy with that location and how we determined that target. I'm pretty happy with the result of it, and we needed a reason for a pullback. There needed to be an excuse. There needed to be a way to explain or help trigger an emotional reaction for the market to drop. And this was perfect. What just happened right now is perfect. Okay, it's really, really nice. And so the news is going to explain to you all the reasons why Trump backed off and is saying that we're putting a hold on the tariffs. We can't really know anything, okay? That's why we study charts. That's why we pay attention to the media. We pay attention to what they're saying, and you know, we use our own brains to determine what's going on. One second. And if you put faith in yourself and faith in your own thinking, you start to see a very clear picture of what's going on. Like I said, I don't know exactly what reasons Trump had for putting a 90-day hold. What I do know is that the drop worked very beautifully to keep price proportional. They spent many days down in this area in an institutional buying zone. Some big players in the financial markets came out and were warning people that the markets were likely going to go further down, instigating more emotional panic selling. When the banks were accumulating within a demand zone, and then after the accumulation, there's the big rally up, because what happens is they keep price within a range on the lower time frames, right? And then after, they will start buying at higher prices. And when they do that, that is represented as a major move to the upside. And so when retail traders come to the markets, hedge funds, all those people that are not the big banking institutions, when they come to the markets and they see a big spike up, there has to be some reasoning behind it. There has to be some logical explanation for it. You know, you're looking at your screen, you're like, why did it rally up so much? So they come out and say, you know, they time it perfectly with Trump releasing this statement that there's going to be a hold, and you see the spike up, and you're like, oh, that's the reason why price spiked up, because they put a hold. Everybody's buying now. Everybody's, you know, feeling very confident about the markets again. Meanwhile, the banks already accumulated their long position. Okay, and that leads me back to what I was saying earlier. Now that we have this spike up, we're probably going to get a short-term move to the downside. Why? Because all those people that are coming in late to the game, because retail traders always come in late, they just always do, because they don't know what's about to happen. They don't know that we're inside an institutional demand zone, so they have no clue that price can rally up from that area. So they need to wait until things actually take place and it's already too late in the game, and then that's when they get involved. Now that's why I think there's going to be that short-term move to the downside, shake out any of those traders that came in late, and then on the dip, the banks will come back in and buy, and then very likely we see all-time highs. I'm just saying, okay? Because if they're going to keep price proportional here, look, okay? Where would I put my next target? I'll tell you. It's not that one. It's going to be yeah, right here. That's my next target. Okay? There you have it. 6,766 is the next target. So that's what I suspect. From here, it won't be a straight line. They won't make it easy. You know, whatever way, but that's the logical next target for the S&P. And so knowing that, now's the time to look for stocks that have dipped really nicely into institutional demand zones. And that's what we're going to be doing here at White Oak U. So this is why I was telling you this is the perfect time to join the school, because I'm going to be going through all of our watch list. There's been a ton of stocks that have been dropping down into institutional demand zones, and there's going to be new setups on lower time frames. So we're going to be looking at trades in the stock market, potential trades for gold, copper, silver, nat gas, and then we'll be looking at the currency markets to see if there's any good trade setups. Recently, the last year or so, there hasn't been anything really good, really juicy on the currency markets. That's why we've been focusing mainly on other assets like the stock market. And but when they do set up, when it's high probability, we will definitely jump in. It's just I'm not going to trade something when it's not high probability. Okay, folks. It was wonderful to see you guys. Thank you for joining. Hit the like button if you like the video. If you're getting a lot out of these sessions, I appreciate it. Show some love and show some support to your boy. And hope you have a good day. Thanks. And if you want to join us, again, we're going to be starting up very soon on Monday. You still have time to join, all right? We'd love to have you. You take care. Have a good one.